place my order based off of the volume in the order book.
Yeah.
A lot of times it was spoofed and it didn't work, but when it was a big ass order, it usually went through.
No, I feel that. I get it. Man, when I trade Solana, when I used to trade Solana, um, back in 2020, I used to be, dude, my orders were so big that you could see them on the DOM, and people would be like, I know people saw
Are you
them
recording
on
this?
their screens too.
Yeah, you were being a market maker.
Yeah, pretty much. Yes, I am recording now. Recording at this very moment. All right, so what's going on, Bull?
All right. Um, I'm gonna basically repeat from the other day. Okay.
Okay, that's cool.
Um, I was gonna ask. Okay, how? So like, if I'm somebody that's just looking at this chart, right, and I know the Pine script represents like different levels
Yeah.
and of time frames. Like, what other information should I know? Like, if I don't know anything, like I just straight up copy your trades, like parallel channels, patterns. Like, can you go over that?
Yeah, I mean, you just got to keep it super simple, and you need to have, let's see. So to keep it really simple, the three things that I use, I'll even put them on the screen. I'll put them here. I use, oh, whoops. I use fucking A. Why can't I change this text? The hell? What's going on here? Why, what the hell is going on? Why won't it let me change my text? What's happening? What is going on?
No, your mic cut out for me.
It cut out? Can you hear me? Wait, hold on. Can you guys hear me? Hello? Is that better?
I can hear you now.
Okay,
Yeah, I can
cool.
hear you now.
Oh, okay, I had to change my
Yeah.
my connection because I'm outside with my computer. I think that's why this was not okay. Here we go. So the things that I use, parallel. How do you spell parallel? Oh my God, parallel. How do you spell parallel? Is that how you spell it?
Parallel.
E. Wait. E. How?
P A P
E.
A R. Yeah. No, no, 1 second. 1 second. Let me just pull it up. Uh,
Parallel. Is that how you spell it?
Parallel.
L. Okay. So use parallel channels. We use the Pine script. And also multiple multiple time frames. Okay. All right. So those are the three things that I use, which is not hard to understand. Super, super simple. Parallel channels, Pine script, multiple time frames. Now, how do I use these all together? Now, I basically, and also this is just one way that I trade. This is just one way because I know you guys have seen me do channel breaks. I mean, you guys have seen me do um, breakouts, breakdowns. You've seen me do it in many different ways. There's also gap fills. There's also patterns, but that's all, you know, you learn with time. But what the parallel channels, the Pine script, and multiple time frames are something that you can do anytime that you see the setup happening. So I usually, set up before I even care about levels too much. I usually try to look for a parallel channel. I try to look for something that gives me some structure to start. So I first need to figure out what the trend is looking like on different time frames. So like I obviously always have two time frames opened up on either side, usually a 1 and a 5 minute. Sometimes I'll glance at the 15 and also the hourly to see like what direction that we're kind of that we're kind of going in right now. But usually I'm sticking to like the lower time frames, then looking at higher time frames to see if that direction is like depending on like if we're like at the in an hourly, and we're looking kind of bullish, I will zoom down to like the 15 minute to see where the 15 minute is currently sitting. If we're at a high of the 15 minute, like at a breakout zone, or we're retracing a bit to see if we can get a better entry. Seeing how far down it will retrace on that 15 minute if we're going to continue being bullish. And from there, I'll go down to like my 1 or 3 minute to see what it's looking like on that time frame as well. Because if we go to our hourly, you'll see right now, our hourly was looking bullish and it's still playing inside the last hourly. This previous hourly is a hammer candle, but doesn't mean it's going to go up just straight up. We still have 46 minutes left in this candle, so we need to go to lower time frames. Then we need to understand what we're playing with. So even on the 1 minute, we can I mean, I see these all the time because I'm constantly doing them, but you can see a parallel channel. And the way you draw your parallel channels, you get as many touch points as you can. A rising channel, you get as many touch points as you can on the bottom of the channel. I'll then make it look as pretty as you can and see how it looks on the higher time frames. So you can get a more clear understanding of the parallel channel, like where it should be touching on the lower time frames. Then you just go to your higher time frames, like the 5 minute, and see if it makes sense. Like for this, it makes pretty good sense to have this channel touching these points, all these points. And from there, um, you can basically try to get an idea of what your next play might be, depending on what the higher time frames are looking like. So you go to your 1 minute, you're seeing that we're breaking this parallel channel. Okay, well, we could be in a bullish sentiment, like we could be trending upwards, but at this current moment, it's getting a little weak. Now, how do we know that it's getting a little weak from this momentum a little bit? Well, we have a break of the parallel channel, then we also use our pine script. So obviously our pine script, when we look at our pine script, like I've explained before, uh, the daily is our steel wall. The 4 hour is our brick wall. The hourly is our cardboard wall. And the 15 minute is our paper wall, like I've explained many, many times. So since we are coming to this area of resistance at the hourly, which is our cardboard wall, and breaking the rising parallel channel, we have a 15 minute support underneath that, which is a paper wall. So the expectancy of this to break down from here to get a better entry, if we're looking bullish, is high is more significant. Like you can get a better entry just seeing this smaller time frame play, because this wouldn't be if you were going to short this, because we short rising channels, it would have to be quick because we're in the 1 minute time frame. So whatever time frame we're on is the amount of time that we're going to be trading that trade. So you can use the lower time frames to take quick scalps, or you can use the lower time frames to get a better entry on your position that you think it's going to go. Like you wouldn't be shorting this. I mean, you could if you're quick, but most usually you wouldn't be shorting this because it is so fast. I would only short it if the 5 minute was giving us more resistance, was giving us, some other type of play that we could do on a bigger time frame so we can hold it for a little bit longer. But with this, how it's working right now, we have a break of the parallel channel on the 1 minute. We have a breakdown from the 4 hour, and now we're coming back to the 4 hour and potentially resisting this, or we hold it as support. Then we can take a long off of this lower time frame, just depending. Because on top of this, as well, is we have a lowering channel as well that's forming. So we have this lowering channel here. And when we have lowering channels, we're looking for breakout longs. And with this breakout long possibly here, where we got a better entry on our lower time frame for our higher time frame continuing, is that we have this lowering channel, plus we have a 4 hour support, which is our our brick wall that's holding as support that could potentially take us up higher. It's just a lot, and you have to use like multiple time frames to find the best entry, multiple time frames to try to find what makes the most sense. Because this is very simple. Everything that we're doing is very, very simple. You just have to research it and execute as fast as you can once you see it. Because once you see it, millions of other people already saw it and they're already going with it. So you have to be quick. You guys see how quick I trade during the day. And I was trying not to do that as much today, but It was hard. I was doing better trading quick, getting in and out of positions, because this is just a game of musical chairs. Like, we are just trying to be the first one to sit down. We don't want to be the one walking around the chairs and continue to walk and hear the music. We want to sit down as fast as we can, because we're going to be sitting down many, many, many times until the game is over, which is the end of the day, or the time frame that we choose to trade, 9:30 to 12. If you trade 2 to 4, cool, but you need to be able to sit down as many times as you can when you enter a trade, when you enter the game, in order to win the game. I mean, you don't have to win the full game, but you want to win as many times as you can to get to the end of the day or the end of your time frame. So you got to think of it as a little bit of like a game. But pretty much, I just use these parallel channels. Where did my note go? I use these. Where the fuck did my text go? I use these parallel channels and support resistance lines, which is basically plotted out for our Pine script. Now, every time frame is going to be different. Like, if you're looking at the 1 minute here, and this is a 15 minute, and then you're looking at the 5 minute over here, and you're seeing a potential support on the 1 hour or rejection of the 4 hour, you kind of just have to. I mean, right now it's kind of hard to read because we don't have much volatility, but you just have to understand the structure of the time frame that you're trading in. Like, with this could just be a pullback on the 15 minute, and we could push right back up. But and also you have to understand, like, if you look at the higher time frames as well, you can see different resistance points as well. This 4 hour has been a consistent resistance point. The 380s have been consistently resisting. So I wouldn't take a long. I mean, yes, you could get in at a riskier play here at a better price, but a riskier play when it drops down. But if your bias is long, but my bias would be I wouldn't take a long until after we got over the 4 hour at 380s and held above that 4 hour at 380s to take a long. Because that 4 hour at the 380s as well, which you can see in the past has been resistance, is also a resistance here and also a potential break of the lowering channel to the downside.
hard work mellan med tog.
Does that make sense at all?
Yeah.
I know it's a lot of a lot of little bits of information. Paulo, come here. Come here, Paulo. I know it's a lot of little bits of information, which it might feel overwhelming to think about it, like, as, oh, I got to know this. It's not that overwhelming once you start practicing it. That's why I want the majority of the traders in the group to size down, because it, what what matters more is the confidence, not the amount of money that you make. Because even if you make $500 in one play, it doesn't do you any good if you don't know why you made that $500. Because if you don't know why you made it, you're going to lose 500 and not know why you lost it. Then your confidence is going to be shattered. So I'm just trying to basically what I'm trying to perceive through the group is that, or try to give light to, is that you need to build the confidence in what is making you confident. If you can go into the kitchen and make a 5-star meal and you know exactly how you did it, you're going to be confident in going into that kitchen, making that meal every time you want it perfectly. You're going to be very confident. Yes, you could leave it in the oven for too long and burn it accidentally. It happens. It even happens to professional chefs. It happens. It's just like playing sports. You could be the best basketball player, best baseball player of all time, but you fucking wore out your muscles from the game before. So now you can't play as good. It's the same thing with trading. If you don't have the confidence in what you are trading, if you're in the confidence of your chart and your setup, you won't have a good um, outcome going into the next trade. You need to know what is making you confident. What's the ingredients to the recipe that you are creating? Because there are millions of different people with millions of different ways of making a pie, but they all get similar results. Or making cookies, they all get similar results, but they made it differently and they all succeeded. It's the same thing with trading. There are millions of different ways to trade this market. Millions. There isn't just one singular proven way of trading the markets, and they're successful. It just isn't. Even the most professional traders, they lose. The most professional traders, they win. But the thing is that there's no single clear-cut way to trade this market. It's all built off of algorithms and emotions and history and news and just all this different shit. It's built off of so much different shit that what you have to also take into account is that we are looking for micro movements. So we are capturing we are capturing opportunity off these micro movements that can make you a lot of money because there's hundreds of billions of dollars in this industry. This isn't a small industry. This is life. Like the this is the one equation that's constantly shifting because of how humans are reacting on this earth. Like this is like this is like air. This is like almost a necessary component to human life at this point in order to understand how the world is acting. So we are dealing with one of the biggest financial instruments that we could possibly deal with. Obviously, there's different equities, there's different types of markets we could trade, but the tech market is so big that there's so much information that goes into it that allows you millions of ways to grab opportunity off of it. So what I'm trying to show, which may confuse people because they're trying to trade all these different strategies and they're like, well, this guy does this, he does fair value gaps, he does ICT, he does, a change of structure breaks, he does patterns, and they're all doing different things, but they're all getting different results. My mentor says this, his mentor says that. It doesn't matter. Yes, you can learn in a million different ways, but what I'm trying to focus people on is to have one way of straight thinking. I'm trying to break it down as simple as possible. I know when I make money, like especially when I'm showing like, oh, I made 8,000 yesterday, I made 8,000 today. It's not easy. All I'm doing is playing different types of patterns. I'm just watching patterns. You guys will see me say, looks like an M pattern, looks like a W pattern, looks like a H pattern. That pattern is real. That pattern is there. The chances of it working every time are not high, but the chances of it working when I see confluences are higher because I have more like, damn, look at that shit just dropped. So I mean, there's a lot of different ways. You have to be on your toes in this market, and you just have to find the most opportune time to execute on a trade in order for it to work out. I mean, even today, like there's different types of trading days. Like there are trend days and there are chop days. There are so many different types of days that you could trade. And I'm really good at choppy days. I'm really good at doing choppy days. Reason for that is because it even if you aren't completely correct and it goes out of your favor, most people lose because they take a stop out because they cannot handle taking a red day. They can't handle seeing negative $1,000 on their chart. That's where my strengths come in because I can handle it, I can operate with it, and I can get through it knowing that it's a chop day, knowing that price will bounce back. Hopefully, I don't like to be hopeful, but there's a higher chance of price bouncing back into my favor than it just going 150, 200 points in one direction continuously for the day. That's why I hate trend days because trend days they're not forgiving. They do not forgive. When they go and they never come back to your point. No matter how many times you DCA in, they never come back. Unless it's the next day and you already have to be out of your position because margin requirements, you can't hold on to your position overnight, so you just lose the money. And then it's harder the next day because you have less money to put into a position and protect yourself. So, I mean, there's so many different ways to trade. There's so many different ways to, shit, I'm not even reading your guys' comments. I'm so sorry. I can't hear anything. SWAT trades, you're going to have to reset your, can you guys still hear me?
Yeah, bro, I can still hear you.
Oh, okay, bet. Yeah, it's just,
Yeah. Do you want me to keep going with the questions after
yeah, go
each
ahead.
one?
Go ahead. For sure.
Okay. The next question is, all right, let me see. What should my position size be? What do you need? What do you need?
Well, it's all
Actually, the question is, what should my position size be? Sorry.
well, it's all custom to what your account is. So, um, it's all accustomed to what your account size is and the risk. It that is all personal. So if I were to tell you, just as a person to tell you what you should do if you have a smaller account, I would be telling you trade anywhere between 2 to 5 MNQ if your account can handle it. Um, because and I would start out with just 2 MNQ and build into your position. Yeah, it's very relative to the risk that you're allowed on your account. So it's all because you see me like when I was trading with 2K, I was only taking I wasn't even doing 5 MNQ. I was doing like 4, maybe 3 at a time MNQ. And once I doubled that account, I started to allow my position sizes to be bigger, but I was still holding myself back. And you could see it was a little bit of a struggle for me to continue to push that account higher and higher. But once we broke through to, I don't even know, it was like 8,000, 9,000 bucks in the account, I was able to position my sizes bigger, knowing that my risk was higher and I would have to be quicker with my trades. But my position size did grow. It just depends on what you're allowed. Like with Webull, you have to do the calculations. With other brokerages, you have to do the calculations because margin requirements are different. With Webull, for every 1 MNQ, it's $176, I think, right now. It used to be 121. And with 1 NQ, it's 1,760. So you have to calculate it depending on what your account size is and what you're able to risk or what you're willing to risk. So, I mean, if you want to tell me how much you have working, how much are you working with, then we can go from there. Do you have a
So like
specific?
I currently have a 25K account and I'm up 300 on it, so I'm at 25,300. The profit
Okay,
goal is 1,500.
okay. So, and you're allowed 4 NQs, 40 MNQs.
Yeah,
So,
foreign Qs, 40 MNQs.
and your drawdown is 1,500.
Yes.
Okay, so this is how you calculate it. So let's just start off with 1 MNQ. So 1 MN, I'm doing it on my calculator on my computer. So 1 MNQ times 2 is $2 per MNQ. Okay, so for every dollar that you move, you make or lose $2. So, how much are you shooting for making per day on your account? Like,
The goal
what
is
are
like
your
between anywhere between 100 and $200 for the
Okay.
day.
So we know that the Nasdaq can move 100 bucks in a day, more, if not more. So relatively, if you risk 1 MNQ, which is, and again, I'm going to say this really quick, the longer you're in the casino, the higher the chances you are of losing. So this is why you guys see me doing sometimes 5 NQ at a time, because I want to be in and out of that position as fast as possible by making as much money as I can. It's very risky, but it has worked out for me way, way more than doing one NQ with 5 different trades and trying to get 10 points off of each trade. I'd rather do 5 NQ and get 10 points in gain than do 5 10-point moves with 1 NQ, because my chances of winning are a lot lower when you enter the casino that many times. And I keep saying casino because this is the biggest casino in the world. So, um, I would probably say do 2 MNQ, 2 times 4 times 10. So with 10 points, you would be making 80 bucks, which is not hard to capture. But also with 10 points, you'll be losing 80 bucks. So, it just depends on what you're willing to risk. Like, if you're trying to pass this account, I would just be going for A+ setups, obviously, and also I'd probably be going a little bit heavier if this is a combine account, like a challenge account. If it's a challenge account, I trade those differently. I try to get past those in a day or two. So because I don't like working for free. I don't like working for a company to trade a paper account for free. So if I were you, I'd be positioning a little bit heavier. I'd probably be doing 4 MNQ at a time in your practice account, which would be $32. Wait, 4 times 4 times. 2. So it'd be $8 per movement. Whoa. 4 MNQ times 2 times. Wait, why am I getting confused here, guys? It would be 4 MNQ. So every 2, 4, 6, 8. So it'd be $8 times. Yeah, 4 MNQ will yield $80 for 10 points. So I would probably be doing 8 MNQ. That's what I was looking for. 8 times 2, which is 16, times 10 would be $160. So I'd be going a little bit heavier. I'd probably be doing anywhere from 8 to 16 MNQ at a time. 8 to 16. And I'd probably start out with 8 during the day, and build my confidence up with the trades that I'm seeing and trying to get an understanding of what the market is doing, because you don't want to just enter in on the market open and think it's going to do one thing and then it does a whole nother thing, or think it's going to be a trend day and then it becomes a chop day and you get all fucked up because it's just chopping around. I would probably enter in with 8 MNQ at a time, and try to gather 5 to 10 points at a time. Then I would build my position size up throughout the day, understanding where the market looks like it's leaning towards, either up or down or chop. Does that make sense?
Yes.
Okay.
Um, and then what's the next question? Oh, what's the best time of day to trade?
Every day, 9:30 to 12 is my favorite time to trade because there's so much volatility. There's so much new money going in and out of the market right at 9:30. There's usually a lot of news, and just different types of just news data during the morning. Um, Also, the highest volatility point, if you're trying to not sit around for very long, if you don't have much time during the day, is 3:50 p.m. Uh, that is MOC, market on close. The buy and sell side imbalance comes out, and it usually pushes the market in a good direction. Sometimes MOC is pretty slow, but most of the time, I would say 90 or 85 to 90% of the time, MOC, you'll get a 50 to 100 point move in seconds. You'll get a huge bounce, and it's kind of like a 350 is what I would say is roulette, because you really don't know. The last 2 days, the MOC has come out to be about 2 billion, which has been awesome. So there's a lot of buyers in the market, but it's all a gamble because the market could be moving really high, really, really well. Then the imbalance will come out to like 500 million buy side and the market will just drop. So the best time that I see is 9:30 to 12. I can get my day started, I can trade, I can get off, and if I don't feel like getting back on, I can just be done and enjoy the rest of my day. Because usually, if I'm not doing well in the morning around 9:30 to 12, I generally won't do that much better in the afternoon, because I'm doubting myself. It's been a little bit different the last couple of days, but because I've been coming back from the dead and making the account back to break even, basically, maybe a little bit more in profit. But the best time of day is 9:30 to 12. Definitely. Most people will say 9 to 10 a.m. Most people, because that's when most of the money comes in. Eastern time, yes. EST. That's the best time.
Okay. And then thank you for that. And then for my next question is, what are the rules to live by in trading?
Don't be a three. Definitely don't be a three. I think Omo knows what that is. Thomas especially. Don't Omo. Don't Omo. Rules to live by. Um, Well, those aren't really ever changing, but what I have realized is that this is not a sprint. As much as I want it to be, and I want to make $1 million in a week or in a day, or even $10,000 in a day, as much as I'm able to get to those numbers, like $10,000 marks in the day, it's not guaranteed, and it's not something that you should be focused on. You should definitely just be focused on, especially with trading, because it is such a sweet and sour game. You should be understanding what you need, not what you want. You need to understand your needs over your wants. Find out what you need during the day, find out what you need during the week, find out what you need during the month. Break it down. Understand what your current income is. And if you're trying to eliminate your day job, then you need to figure out how that is possible. If you're making $2,000 a month, $3,000 a month off your day job, then you need to estimate how much you need to make per day, which you don't want to pressure yourself because if you don't make that money during the day, it's okay. But the thing is you need to understand what your average needs to be in order to break that down. So you just need to be patient. You need to understand that this is a marathon, that this is a whole marathon. This isn't going to change your life in one day. Um, get off of social media, stop watching other people make these 50, $60,000 days. Stop watching TJR, that which is not a realistic type of person. He has a lot of fuck you money that can be thrown around because he made like $10 million in crypto. Um, just pay attention to yourself. You are your own competition. No one else is. I don't care if you make $1. I don't care if you make 100,000. What matters is what you can accomplish, what you are able to succeed with in your life. Nothing else matters. It doesn't matter. Um, and just continue to be focused on who you are. Focused on what matters to you. Doesn't matter if someone else has a nicer car, nicer house, eating better food. Doesn't matter as long as you are able to keep up with yourself and you can make new progresses every day. That's all that matters. Because no one cares about you at the end of the day. And no one is going to give a shit if you have a new piece of jewelry or buy a new car. No one gives a shit because they're still focused on themselves. So they're not going to, no one's going to be impressed by what you can do and buy and all this different shit. All they care about is themselves. So you need to only care about yourself when it comes to the market. It's a zero sum game. So there's going to be losers, there's going to be winners, and you want to try to make yourself one of those winners. That's why I have you guys in this group. I know that I can do pretty decent with winning, and I want you guys to also be able to find an edge on this, using my edge or using my edge to create your own edge in order to win. I mean, I want to give you guys the confidence to win. I know that was a lot, Bull, but there's a lot to that, a lot to that question.
These are really good answers, and the longer they are, the more I can just keep replaying it.
Yep, I got you. I
And then,
got you. I got you.
for my next questions is like, let's say like I want to get in the position to like quit my job someday, right? Um, like how should I go about like doing that with trading? Like I don't want to have the mindset that oh I want to make money just so I can quit. Like I want to learn how to trade to execute the fucking strategy. But like I don't know if you could tell me how like my money should be invested. I guess you could say.
Well, you always need to make sure you have enough money. Some people say 3 months supply of money in order to keep yourself alive, keep yourself, not homeless, keep yourself from not, going broke. I personally think you need about 5 years worth of money in order to um, do extracurriculars with financials. I feel because money comes and money goes very, very fast. Very fast. People think if you have a 50K, 100K account of your own personal money, you can just continue to make money. It's not that simple. I might make it look simple. I might make it look like you can just make money if you have a ton of money, but it's just not the truth. If you can't manage a $100 account, you can't manage a $10 million account. You just won't be able to. Um, you need to make sure you're comfortable with what you have. If you owe any debts, make sure those are paid. If you lease a car, make sure it's paid off. Anything that a um, is going to be uh, a liability. Make sure you make it not a liability. Make sure you can, like, I own my house, I own my car. I only pay for my internet and cell phone bill and utilities. I don't owe anybody anything. So I am able to feel a little less stress if I don't make money for a month or if I don't make money for however long I don't owe, and no one can take my shit away. So that's what also keeps me kind of more calm and more easygoing with what I do, because I don't owe anybody anything. So I don't have these lingering thoughts of I gotta make sure I make this amount of money so I can pay these debts, that I can buy food for myself, that I can do these simple life adult life things that you need to be able to accomplish, in order to be protected. Because at the end of the day, we all want protection, and money is one of the biggest things that help us stay protected. Um, I don't know. You just want to make sure that you have enough funds to be able to take care of yourself, and also enough funds to be able to use them, as risk. Because whatever you put into your account, whatever you are putting into your own personal account or even buying prop firms with, is money that you should know is going to disappear. That should be the first thing. You should know that that money can be gone and that it's not coming back. I mean, obviously, I want us to win and I want us to make money, but you also have to know whatever you have in your account is what you're willing to lose. What else you got for me?
Okay, I have two more questions.
Sure.
Um, the second to last one is how did you keep going through all the trials and tribulations?
Uh, man, I've been through a lot. Been through a lot in my life, and I'm 29. I'm not too old, but I'm also not too young. I've been through a lot of hardships with friends, family, business opportunities. I've seen the good, the bad, and the ugly. Um, Everyone has struggles. No one's life is perfect, and in order to be a better you, you have to be able to take on challenges that are hard. You got to be able to break through to the next level of wanting to grow. And some people do that through making their own business. Some people do that through helping communities. Some people do that through working a job. There's a lot of different ways that people do things in order to impress themselves and make themselves feel whole. Um, for me, it's financials. It's always been financial since I was super young. I've always been intrigued by finding the next thing that can make me money, whether it's jailbreaking phones, taking care of dogs, mowing people's grass, whatever it is. It was always money motivated. Um, but I also like to accomplish those goals of getting things done and making people happy. Um, and what I've learned with trading in the market, even with losses, is that it's not over until you say it's over. It's not over until you give up on yourself and give up on the passion of trading. Um, Trading isn't going anywhere. It'll never end. There will always be volatility in the market. The market will always be moving. So I never really get too upset about one day that the market isn't moving very great or that I'm losing, because I know the next day there's just as much opportunity as the day before. I always know that there's always more. There will be wins, there will be losses. There'll be good days and bad days, but as long as you can, persevere and get through those days, then you'll make it for the next day. You'll continue to make it. I mean, it's a lot of these are loaded questions, so I have a lot to say about it, but it's you just got to be willing to take on the challenges. It's with anything, relationships, friendships. There's going to be challenges, and if you're not willing to challenge yourself, then you're not willing to be, better than the next. You're going to be stuck with the people that aren't trying. And if you look around in this world, a lot of the people that do not try are stuck in the same spot, in the same exact spot as their predecessors, as the family before them. Um, they are, there's a lot of people that blame their childhoods or the way that they were raised or certain types of things that happen to them in life that won't allow them to get to somewhere else, but that's because they are wanting to live in the past. I'm not living in anything besides my own world, and I'm trying to create my own world. It doesn't matter about what my family's done or how successful they are or how how much failure they have. I'm focused on what I can take on and what my body allows me to do and my mind allows me to do. And my brain allows me to take on risk. I always have been. My brain, I've noticed that it likes risk. It really likes risk. It's what keeps me alive. It's what keeps me excited to get to work and do things because the risk is there. It can be challenging, but even with the challenges, it's more exciting than me wanting to go and work a day job. Like, I don't want to do that ever. I haven't worked a day job since I was like 16 years old at TJ Maxx. It's been a long time since I've had a job. Actually, I think I've only had like one or two jobs that were actually like employee jobs, like where I had to fill out government paperwork to be a to be an employee. But I just like the risk. Um, you have to know what you're built for. And one of the things I'm built for is taking on risk and being able to handle my emotion. Trading will teach you a lot. It'll teach you a whole lot of shit. What else?
Okay, and the last question is on the bottom of your screen, like you have I don't know if that's an EMA or a SMA, and then you have something below that. Like what are those?
So these are just some things. I don't use them all the time, but Thomas, who's in here right now, and also ZK, he's not in here right now. They have been practicing the use of stochastics and the MACD. The MACD basically tells you momentum, um, momentum on the chart of like where price is flowing in and out of. And the stochastics is kind of just like how they have the settings on it. What they've given me is um, basically like the best timing to enter a trade. Stochastic reset at the 20s and at the 80s, whether you should get into a long or a short based on your time, based on your chart, based on your levels, based on a lot of different confluences with higher time frames, and seeing like the best time to get in. Because if you're looking over here, like just really quick, if you're looking over here, you can see the stochastic. This is the 1 minute, so it's not going to be as good as like doing a higher time frame, but the 1 minute is showing, this is looking bullish. Like you're like, oh shit, like a lot of shit's coming in. Like looks like we're gonna fly. But on the stochastics, it's showing really high. So you know that there's a potential. Doesn't have to, but there's a potential that this might come back down. Even though momentum is kicking in, you can also see on the momentum it's getting a little bit lighter, which is making the momentum fall. And eventually we just came all the way back down. So it's just two different indicators that they're both lagging obviously because they can change in a blink of an eye, but they give you a little bit of context of where the market might stall a little bit and where there might be a better entry based on time.
How can I set them up on my chart?
Yeah, so
Yo,
if you
Bull, if you
go,
wanna Bull, if you wanna shoot me in the DM, I'll send you over all the information.
Thomas can hit you up with all
Okay,
of it. Yes.
all right, word. I just sent a friend request.
Yeah, F Durska. Yeah, you don't want to be tied to, I mean, trading can help you pay your debts, definitely, but trading can also make you go into more debt. So you want to be very careful. It's a very, very proper balance of figuring out what kind of risks you want to take in comparison to what kind of responsibilities you have. You gotta be very careful. Positive. You said I have two monitors on. One I have TradingView and my other TradeAvate. I see NQ with different ask and bid. Is this normal? Um, Yeah, TradingView. That's why I said don't execute on TradingView because it's going to be a little bit different. It's going to be like the time, even if it's like a millisecond difference in delay, it could be everything. So never execute on TradingView. Positive. Always execute on your brokerage. Always execute on your brokerage. It's going to be that price on the brokerage if you execute there. It might be different on trade. Like you might execute on TradingView and get a different fill on your brokerage, which you don't want to do. I never, ever, ever execute on TradingView ever. A lot of people have asked me, oh, so you don't trade on TradingView? You don't trade on TradingView? I'm like, no, I only chart. I only do charting. That's it. That's all I use TradingView for. It's just charting because they have the best tools. They have the best viewing of everything you could possibly get. I do use Webull for the 100 tick chart because it comes with it. So I do love using it for the 100 tick chart. But TradingView is so good for me to see um, how the chart is looking. I don't trade ICT at all. No, I mean some of my concepts might be a part of the ICT concepts, but I don't I don't acknowledge myself as an ICT trader. I don't do SMT. I don't do any of that stuff. Not at all. Simply price action and pattern trading. I keep it very, very, very simple. Again, there is so much money in this market. You do not have to have a complicated trading strategy. We're not going for the, like TJR said, he said some shit because I follow him and I watch him sometimes. Some of the shit he says is just outright outlandish and funny. That's why he has so many people that watch him because they're just all degenerate. But he always says, "I'm going for the little Timmies. I'm not going for the big Drake candles." Like he's saying shit like that. It's just so stupid. But it's true. We're going for the little bits, guys. We're going for the crumbs, and the crumbs can add up to hundreds of thousands of dollars. We're going for the crumbs. I promise you. Go for the crumbs. Do a little bit every day, and it will compound. Even if you're doing $50 a day, it's 250 bucks a week. It's $1,000 a month. If someone came to you and said, "Hey, I'm going to give you $1,000 a month extra," you'd be like, "Fuck yeah, you are. That's awesome. It's going to help me immensely. I can pay this, this, this. I can take this vacation. I can do this, 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 whatever. I can feel a little less stressed about my day to day because I'm getting that extra $1,000. It's $50 a day. That is not hard to accomplish with trading. It's not hard at all. It's actually probably one of the easiest things. Yeah, it's a honeybee collecting. There you go. One drop at a time. Bees make very, very tiny bits of honey. And look at all the honey at the stores. I mean, I know a lot of it's like processed and that shit's added to it, like sugar and whatever. But you get natural honey and you look at the jar and you're like, shit, this is $10, $15 for this little jar. But you got to remember all of the process that went into it. It's crazy. Like that whole process of those little bits of honey going into that jar over time accumulates to make that value. Like it's huge. So you need to just Yofi, stop. Um, you need to be complicit with taking these small wins. You need to because I know like taking $100, $250 seems like not that much, but look where we are at the current day. I mean, this 2K account, guys. What did we start it last week? Last week I think we started it. And now we're sitting at 21,000 some odd and change. I have to look at the Weeble. I'm not logged in on my computer on this laptop. You don't have to feel attacked, Ali. I'm just saying, like it's trading is easy and it's hard, and you just need to work on getting those small wins. Because over time, even if you're making $20 a day, it's still $100 a week. You do that for multiple months, your account is up $1,000. Like it's, I mean, yeah, 2 months, $800. It's just you got to be okay with the
Um,
small wins.
like on the chart, do you think you could show us examples of like the downtrend and the like the rising channels,
Yeah,
like right now, like just different examples of it and how you do each one?
sure. I mean, it's literally right here. I'm just gonna show you off this example again. So we have a rising channel. Like let's say we only have this much data right now. Okay, this is all the data we have. We don't have any of this other data over here. We only have this. We see the breakdown. Or really, yeah, that's fine. We can just do it like this. We see this. We're not in any trade. We didn't take any trades yet. We're just sitting, waiting, watching. It's the 1 minute time frame, so it moves a little bit quicker. But we'll just do it off the 1 minute because this will be the basis of every time frame. So we have none of that information to the right. We just have what's inside this parallel channel. We're watching. We grow more information. We can continue to pull our parallel channel. We're growing. We're seeing information. We can stagger it a little bit. We can try to grab more candles up here. We're still seeing information. We pull it and we start seeing potential. we start seeing, oh, we have a parallel channel. Well, Asher does the breakdown of parallel channels. It's starting to break. Like let's say the like this candle turned into something that was like this, okay? And it turned red. What the hell is going on here? What was that? Let's say that candle turned red here. And we're like, oh shit, like this is one of those entries that Asher was talking about. Rising channel, it's breaking the parallel channel. Well, shit, I'm going to short it. Well, no, that's not what you do. You need to wait for a break of the channel and a candle to close under that channel for us to get real confirmation that this might be a breakdown. But it's not because we reclaimed. This turned into a doji, which usually means it's bullish because there's a lot more buyers. Um, Sorry, I was looking at the comments. Doji means that it's bullish. Lower time frames is not as powerful, but it still worked here. The Doji reclaimed a parallel channel, and now we just keep looking. We keep looking for information, and we keep polling. We keep polling it, and we're like, okay, here's more information. We get all the way up, like we see the breakout here, but we don't care about this breakout because we were not watching for a lowering channel right now. We're just waiting. We're not taking any trades. I mean, there is potential where I might be like, oh shit, I might try a breakout here, but that's a whole different scenario. Let's just go over the parallel channels. This is a rising channel. Okay. Now we're seeing some conflict. Oh yeah, by the way, down here, with the Pine script, another reason why I wouldn't short it, even if it's starting to break here, is because we have an hourly, this purple line, which is our cardboard wall. We have this hourly right here, which is also giving us strong support off the Pine script. So we need to watch out for that strong support because this is also telling us that there could be a breakdown, and if it does break underneath this, we could break down further. But since it's holding as support, I'm not even going to attempt to short yet. I'm not going to. And we didn't. So then it went up, came back inside our parallel channel. Okay, we're inside of our parallel channel. We're hanging out at the 4-hour support resistance now. Okay, well, this is getting a little interesting. Let's keep watching because it could keep going up. But instead, we broke down from the 4-hour, which is showing us some strong resistance. We broke the parallel channel. Now, obviously, we're not going to get into this one because it went too fast. But now we wait and we see what's to the right. But we don't have any of this information yet. We see over here we have an hourly support. We're bouncing off the hourly support. But also, we are slightly reclaiming the parallel channel, but right above it, which is different than down here because above here we had a 15-minute, which is pretty weak, so it can bounce right through it. But here on this parallel channel, we have a 4-hour resistance now. So the likelihood of this continuing to go up is a little bit less than the likelihood of this going up down here. So we have the 4-hour resistance, plus now we're getting the breakdown of this channel. So not only do we have one confluence of a resistance, but we have two because it's breaking the parallel channel. Now, let's say we entered in on this candle anywhere inside of this. Let's just say we entered in this candle when it breaks the 15-minute. And this would be a little bit higher risk because we do have the hourly here. But still, we had one confluence showing resistance. We have a second one of the breaking the channel. And then thirdly, we can see if we're going to break this 15-minute to see if we're truly getting weaker. And that's what we did. Let's say we enter in at this candle right here, thinking that we're going to keep going down lower. We enter in at 379. We're holding. We're looking at this 1 hour to break down. And what happened? We broke down. Okay. Now that this trade wouldn't have been like the most fun one to hold because we have so much consolidation and then we have a breakdown, but it happened. And on top of it, not only that, but over here, before this even broke down, we started forming a lowering channel. So now we have our lowering channel. Oh yeah, and you're probably thinking, okay, well, where do we take profit? Well, we just go to our next strongest support resistance. So our next strongest support resistance from the breakdown, let's say we got in at 379. Our next strongest one would be 374. So that is well, it's only a 5-point drop, but still 5 points right there. It's not the biggest drop, but we're also on the 1 minute time frame. So the drops will be different according to the time frame you're on, or or depending on the amount of volatility in the market is what I will say, because it's not about the time frame, it's about the amount of volatility from the high of the day and the low of the day. So we would be seeing this breakdown of the 1 hour, and then when our first take profit, well, I mean, obviously it would be 376, but that's not much of a move. Um, if we're getting a breakdown from this hourly, you can expect it to go to the next support resistance, which is the midday, which is 374. And if we break, and you can take like half your position off here, then hold some runners to, if it breaks the daily, to the next major support, which is the hourly, not the 15-minute, but the hourly. And if it breaks the hourly, you can hold some more runners and take it down to the 4 hour. But we bounced off the 15-minute here because we kept breaking levels, and it kept, then we had to look to the left and see where we even bounced at, because we bounced off this hourly, and that's exactly what we did again. We bounced off the hourly again, which showed strong support on this hourly. And as you see those things, you can go into your settings and you can change that hourly. I don't know which one it is, but you can bolden it and make it thicker. Oh, wow. Did I get that one? No, that wasn't right. You can make it thicker just so you know for the future during that day what kind of area that is. It's become a support resistance area many, many times. So if we come back to it, there's a high chance we either bounce off of it or break down hard off of it. So you can consistently change them. Now, with a lowering channel, it's the same thing, just in reverse. We're looking for anything that's underneath the candles to tell us that it's a support alongside of the breaking of this parallel channel. So we have the break of the parallel channel. It might be a little risky because our support is only a 15-minute, and above us is an hourly resistance. So I would be hesitant potentially of taking this long. But if you were to take this long, you would enter in on the next candle that holds, which shot straight up. But you would enter in on somewhere in this candle, and then you'd be targeting your next strongest resistance, which is the 4 hour resistance. The 15 minutes are there, but they're not super strong. You can see they break straight through them. Sometimes they're pretty strong, but you would typically be targeting your next strongest support, which is a resistance, an hourly, a 4 hour, or a daily. You'd be targeting those. And if it breaks those, you can leave some runners if you want to. um, and then you can be targeting your next strongest resistance off of that the 4 hour. So the next strongest one is going to be the hourly, which is right here. You can see we reacted to it, but still we bounced off the hourly and made a new high to 391. And then obviously your stop losses, which are very important, is anything that your account can handle. So if you're trading one NQ, 10-point stop loss is $200. You keep doing the math. You're trading 5 MNQ, 10-point stop loss is $200. You're trading 2 MNQ, 40-point stop loss is $200. Just about 180, 200. It's about 180 bucks, 160, whatever it is. But you would just have to calculate it based on what your account can manage and what you're willing to lose. That's all up to the operator. Does that make sense?
Yeah.
Yeah. So what else can I answer for you? You guys got any questions? I feel like I'm getting bit up out here. I need to go inside. Come on, dogs. Come on, Apollo. Fucking mosquitoes.
Is that pretty much everything that goes into like what you're doing?
Pretty much. I mean,
Like in terms of
I do other things during the day. Like I am doing breakouts. Like if I see a good breakout area, like of going long, because we've been consolidating for a while, then we're using if we're at a resistance that used to be a support, or we're at a resistance that could potentially turn to a support, I will attempt to break out long, just for small points, which I did multiple times today. um but yeah, it's pretty much how I trade, just the parallel channels um and the pine script. It's not much to it. And confidence is a big key factor, which is, you can't really explain it, you just got to have it.
so when like when it when we're in the parallel channel and it starts to like break out a little bit, is that called a break of structure? Like what's a break of
No,
structure?
break of structure is when, like, if we're in a downtrend, break of structure would happen if we start to make an uptrend. That would be break of structure. River, stop. Um,
Yeah.
it's break of structure is different. Change in state of delivery is different. CISD, those are all that's a little bit different. I mean, it goes into, because it might not be a break of structure. What I'm looking for is more of like just a breakout of that current trend that we are currently in, because we can have a breakout of that parallel channel without a break of structure. Like we can have micro plays within the downtrend, taking it long, or micro plays in an uptrend, taking it short, just based off of potential weakness or strength in the momentum that it's already going in. If we're getting a change in state of delivery or a change in structure, then that's a different scenario that you can make a lot more money on. A lot of people make a lot of money on the change of structures or the change of state of delivery, because they're very continuous and they move many points. Where I'm looking for 10, 15, 20 points, other people are going for 40, 50, 60 points in the change of structure, or the like reversal patterns. What are the resources I suggest for beginners? Um, Time in the market. I mean, you can watch a million different people. Yeah, join our community. I mean, we're here to help. Um, but all I'm saying is, like, if you watch one trader and watch another trader and watch this trader, remember the market is different every day, and every trader has their own way of trading. If you start getting all these different types of ideas, like ZK, he's not in here right now, but ZK and also Thomas, they say it's analysis paralysis. I've heard many people say it, but they reminded me of it. But you just get this analysis paralysis where you see so many different types of analytics and you just start getting paralyzed because you're like, well, which one is right? Then you start doubting yourself. Screen time is definitely there. You definitely need screen time. Yes. Just need to be a part of
When
the.
you
Go ahead.
um no, you can finish. Whatever you're saying.
No, I'm just saying you just need to be a part of the of the sessions. I mean, not my sessions, to say the least, but you need to be part of the trading sessions to see how the market moves, how you feel when it moves, and really understand your emotions. A lot of people will say this is you need to have no emotion, but unfortunately and fortunately, the market moves off of the emotional state of the world.
Um, when you draw like the parallel channel,
hmm
should the channel be touching the wicks or the body of the candles for the
That's a
touch
great
points?
question. As many candles as you can get. So whether it be wicks or bodies, as long as it's consistently touching multiple touch points, you're good. And for rising channels, whoops, what just happened? Oh, for rising channels, you want it to be consistently touching as many bottom candles, bottoms of the candles. For lowering channels, you want it to be as many touch points on the top of the candles.
And this can be either body or wick.
It can be either body or wick as long as it's consistently touching multiple candles. Like you don't want it to be going through like bodies and then touching some wicks. You want it to be consistent on what it's touching. If it's touching multiple wicks, perfect. If it's touching multiple bodies, perfect. But only one of the two.
Okay. All right. So whatever it is, just be consistent with it.
Yes. Be consistent. Yes. Make it pretty. Make it as clean as you can. Whether you have to go to the 1 minute, 3 minute, 5 minute, 15 minute, just make it look pretty. If you're seeing a parallel channel on the 15 minute, go to your 5 minute and your 1 minute to confirm how many times it's touching and where it's touching.
Is it possible to back test this strategy with the parallel channels? Like I just
Sure.
go back like 6 months ago or something like that.
Yeah, you can, of course.
Okay.
Definitely. You can definitely go through, find parallel channels. The Pine script won't be able to be back tested because it only updates during the days. But um, yeah,
Mhm.
you'll have to draw your own lines there. I don't use trailing stop. What I've been telling members is to use a hard stop. like a oh fuck type of stop. Then also keep in mind their mental stop loss. So like I told you before, I know NQ moves very crazy. That's why stops are extremely difficult. Yeah, you can find your protected low, your protected high, but it's very difficult to not get stopped out on NQ if you have a tight stop. It's very, very difficult. You have to be very precise on your trading and you have to be really good at your timing, really, really good. So what I do is I just do calculations for what I'm willing to lose. So one NQ, 10 points. And then you break it down from there or multiply it from there because it's $200. That's what most people are willing to risk with themselves is about 200 bucks. Me, I'm able to risk a little bit more. Um, but other than that, they're usually willing to risk about 200. So I just go off of the 10-point theory. How to time the best entry in choppy candles, or do you have a video explaining? So you have to identify where we're stopped. You have to identify why we're chopping. Um, those are zones. So when we're in a choppy set of candles, you have to understand
M or H or whatever.
Okay, is that better, guys? You guys hear me? Hello, hello, hello. Oh shit. Hello, hello, hello.